Well, the impact of the oil crisis is spreading. One casualty from the massive spill could be muni bond markets. I want to take a closer look with Matt Fabian. He's the managing director at Municipal Market Advisors. Matt, great to have you with us to talk about this aspect of it. And, you know, are these issuers, these muni bond issuers, in any danger of defaulting because of what's going on right now in that area?
In the Gulf area, well, you know, first you really have to keep in mind that that is generally a smaller part of the muni bond market generally. So Louisiana, Mississippi, there aren't many big issuers down there. There aren't many bonds issued generally in the area. So it's not a huge area for the market as a whole. For the issuers themselves, historically disasters like this have over the medium term, meaning like 5 years, been a net positive to those issuers because of all of the federal and outside money that winds up coming into those economies. And in the end, you know, this is by definition a temporary issue. So once it is cleaned up, you know, at some point over the next few years, you know, things will begin to go back to normal for those issuers. So if bonds begin to cheapen, it may be a buying opportunity.
But in fact, though, Matt, does that mean, though, that it could be a net positive, more so even than Katrina?
Well, you know, Katrina was a very good case in point. There were some issues which hit. There were some issuers who had cash flow and liquidity issues, at least temporarily, with Katrina. But right now, with the rate of rebuilding and the kind of investment going on in that area, it's probably much stronger today than it was before the storm. So, you know, taking a longer-term perspective, and if you're an income buyer of munis, that's maybe what you should have. If you're looking for total return, you know, looking for capital gains, it's a much less predictable situation.
Well, then overall in the muni bond market then, Matt, because not only do you have got this BP Gulf spill, but also, you know, you've got a lot of talk about, you know, are we going to dip into yet another recession in the economy? Does that make the muni bond market attractive now, or do you want to wait until later?
You know, it's hard to call munis attractive because nominal yields, you know, the yield to the income that you're getting is extremely low. So you know, we're at close to or at historically low yields in the muni bond market just because there's so much demand versus supply, and that one of the problems we're having is that yields are just too low for many investors to want to participate. So it's hard to say that things are good.
That they're attractive, right?
Yeah,
that you're making a whole lot of money out of it.
No, that's right. I mean, on the presumption that income tax rates are going to be rising over the next, you know, year or 2 years, then, you know, these may in the end be attractive levels, but it's hard to say right now. You know, there are certainly some resistance there.
Okay, Matt, you know, Buffett raised this problem, or, you know, this concern last week where he said, look, you know, you're not really sure in the muni bond market whether or not the federal government is going to come in and bail out various muni issuers, and he says that that's a huge problem. Do you agree?
Well, you know, I think that what Mr. Buffett said is there are elements of you know, reasonableness, and then there's an awful lot of guessing there, because you know, for sure municipal issuers are in difficult budgetary situations now. Over the next 5 to 10 and even 20 years, things may not get much better, or you know, there's an awful lot of time between now and then for them to come up with other ideas, you know, either to raise revenue or to move cost up to the federal level. But you know, to say that the impact is going to be on municipal bondholders as opposed to other stakeholders like employees and taxpayers and service recipients is really just a guess, because so far there's just no traction. We have very few. My firm tracks ongoing defaults in the municipal bond market. There's almost nothing happening in those kinds of issuers, in those you know, safe sectors, cities and states.
All right, Matt, we're going to have to leave it there, but good of you to join us about this other aspect, this other angle of the BP oil spill. That was Matt Fabian of Muni Market Advisors.